Can Ethereum 2.0 save the crypto markets? Well, it's no secret that since November, the crypto markets have been in a pretty hard bear market. This was, of course, initiated by a pivot from the Federal Reserve, signaling that they wanted to increase rates and tighten the monetary conditions that have allowed for crypto and the stock market to go absolutely up only for pretty much 2 years straight. The stock market, much longer. We all know what happened next. The mania that had been infectious throughout the crypto markets and the Nasdaq felt like it disappeared overnight. But the question is now, as Ethereum stares down the barrel of the absolute biggest upgrade in its history, what people are calling the triple-halving, stilted to occur here in June. Is this monumental change to the world's second biggest crypto enough to resurrect the bull market that we have come to know and love throughout 2021? We're going to tell you absolutely everything you know about the upcoming ETH2 merge. We're also going to be giving you our opinion as to whether or not this can save the crypto bull market. Now, as we speak, Ethereum is going through a high time frame breakout, which means that Ethereum could be setting itself up for a big move price-wise to the upside. Whether or not that actually happens long-term, we don't know. But if you're a fan of charting, this is a pretty simple trend reversal to spot here on the charts. It's also worth noting that April is a historically very bullish month for Ethereum. If we look back at the last 6 years, we see that 44% gains were had in 2021, 55 in 2020, 18 in 2019, 70% in 2018. Mind you, this was the bear market. This was when the market was in the gutter here in crypto land. So seeing a 70% move by ETH in April of 2018 is significant. Again, if you're going to correlate what 2022 is in relation to the Bitcoin halvings, it's the same distance from the last Bitcoin halving that 2018 was. This, of course, was just a bear market rally, but it's really important to realize that April has been a phenomenal month for Ethereum in the past. 2017 was 67%, and of course, it was very, very bad in 2016. Either way, there you have the data. Before we get into Ethereum, it's important to realize that macro and Ethereum have really been behaving very similarly. If we look here, we have two charts. On the top, you have Ethereum, and on the bottom, you have the US 100 CFD, which effectively tracks 100 of the highest traded stocks, the highest value stocks on the Nasdaq. So effectively, what we're seeing here is that they look very similar. You can see the charts are behaving almost identically week over week, and that means that the correlation between what's happening in the stock market and Ethereum is eerily similar. Of course, you'll notice that over the last few weeks, the stock market has continued to make lower lows, whereas Ethereum feels like it had bottomed out here back in early February or in January. This is because crypto tends to move harder and more aggressively first, and there's also a belief that a lot of the macro bros or Wall Street money that was in crypto exited after the Fed adjusted their policy towards inflation. There's a belief right now that effectively who remains in crypto are the true believers, the idealists, the ETH maxis, if you will, and they're not exactly looking to Jerome Powell to inform their investment decisions. And quite frankly, neither am I. That said, it's undeniable, and as Alex Kruger says here, it's hard to imagine a more hawkish Fed, meaning a Fed that has less interest in pumping our bags. Economy is very strong, can handle tightening monetary policy, uncertainty/upside risks on inflation, 7 median dots for 2022 equals ultra hawkish. Effectively, the Fed is not our friends right now, and that is leading a lot of people to seek other types of investments that are not quote-unquote risk assets. So the question is Ethereum a risk asset? That's something that we're going to be talking about a lot as we explain the merge and everything around ETH2, why it's so bullish, but also why it alone may or may not be able to save the crypto market. So if you're on crypto Twitter lately, you've probably seen posts like this one from Tim Bako, who says, and it seems to have worked, celebration. Post-merge blocks are being produced by validators and they contain transactions. Effectively, what we're seeing is that Ethereum developers are showing signs that the merge is being successful. This is a huge, huge step. So what is the merge and why does it matter? Let's cut to the core of this. The post-merge Ethereum is wildly different than pre-merge Ethereum, and here are the numbers. So what is the merge and why is everyone so excited? Why is this alone igniting such a bullish sentiment around the Ethereum ecosystem? Well, in a nutshell, 90% of ETH issuance will be reduced, meaning that the miners who are currently mining new Ethereum each day, well, that's going to get changed, and 90% of the new Ethereum coming into the world will be cut down. That means way less new Ethereum coming into the world, way less inflation of the Ethereum supply. Two, and very importantly, 99% of operating costs will be reduced. This is something that we've been looking forward to as proof of work has come under wild scrutiny for being unsustainable for the environment. It's one of the biggest critiques of Bitcoin. And here, Ethereum, with the merge, is going to be moving away from some of the biggest energy burning that has led to its criticism. And that is a huge step to be environmentally friendly for a blockchain. Notably, there will be a 50 to 100% staking yield increase. Right now, people are locking their Ethereum into the Beacon chain, and they're earning a staking yield which equates to about a 5% APY. They also can't unstake those staked ETH. Of course, they are getting a token for their staked ETH, which is tradable, and it does have yield associated with it, so it's not like you're fully locked, but it's really important to realize that there's all this ETH that is seeking a 5% yield, and that's going to get bumped up to over 10%, possibly even 15%, to hold and stake one of the best assets on planet Earth. And that's leading to people describing this event as the triple-halving, making Bitcoin halvings look like, quote, a fart in the wind. That's, of course, according to Adriano Faria. So let's now talk about the triple-halving. Why are people calling the ETH merge the triple-halving? Well, the Bitcoin halving reduces new BTC supply by 50% every 4 years. The Ethereum merge reduces new ETH supply by 90%. The merge has been nicknamed the triple halving because it would take Bitcoin 3 halvings to produce the equivalent supply reduction. If you believe the notion that Bitcoin halvings propel the next bull market, and it's pretty hard to deny that, now with 3 halvings creating absolutely wild bullish markets here in crypto land, then it might lead you to believe that the Ethereum triple halving would cause as much, if not potentially a significantly higher impact on crypto prices. But as this piece by Bankless explains, the commodity markets, geopolitical risk, inflation, nuclear war, the loss of up-only momentum of the 2021 crypto markets are just too many bearishly aligned stars. I fully expect, this being the author, the markets to move in a way that completely ignore the fundamentals of the merge. A bear market will suppress all price trajectories no matter how bullish any individual asset may be. So the TLDR here is that the merge is not priced in and that this author doesn't believe that the merge alone will save the markets. We'll approach that question again a little later in this video. It's important to also understand that the merge is extremely technically complex. It's effectively being compared to rebuilding the engine of an aircraft while you're mid-flight. This is something that if it's done wrong could have huge consequences, and that's why it's taken so many years for Ethereum to push this merge forward. And so people are calling for even insurance products around the merge. It's important to realize this is not a set it and forget it plug and play type event. This is highly, highly complex, volatile, and potentially could have negative consequences. But Ethereum being bearish or having low fees, as is the case right now, where gas fees on Ethereum are at almost historic lows since the bull run began back in 2020. The reality is that all of the L2s, the layer 2 scaling solutions on top of Ethereum, they're now able to grow in a very low fee environment, so that hopefully by the time the next bull run arrives, we'll have Ethereum proof of stake, as well as an L2 ecosystem capable of handling the load of millions or maybe even billions of people in the future. I mean, just look at this extremely healthy ecosystem of projects building on Starknet, which is one of the most sought after ZK rollup-based layer 2 solutions that is looking to scale Ethereum. Of course, it's also home to Immutable X, which is a project that we've been a big fan of since it launched. This technology has the ability to scale Ethereum in a dramatic way. Along with literally all of L2 solutions, we don't know which one is going to be the winner, but we're a big fan of these scaling solutions offering a chance for projects like games and DeFi that could benefit from high throughput environments, and quite frankly, their users just won't put up with high fees. They just simply will not deal with it. With L2s factored in, as well as a huge change in the cost of running Ethereum, the emissions for the ETH token, and of course now the explosive L2 ecosystems, it's going to become increasingly cheaper and more effective to build your projects on Ethereum. This is really the moment that everyone has been waiting for, to make Ethereum a viable solution for the future. It's no secret that everyone wants to build on ETH. They just get stopped by the fact that it's too expensive for most projects to effectively reach their core user bases. Their eventual end customers cannot afford ETH. So this change is absolutely massive. And let's not forget that Ethereum is pretty much the home of NFTs. Liquidity has more or less dried up on every single chain for NFTs except for a little bit on Solana. The home of NFTs is undeniably Ethereum. And so creating an environment where NFTs can thrive on Ethereum is undoubtedly a major unlock for bringing mainstream audiences to the blockchain. Now, Crypto Gucci sums it up nicely here and says NFTs are onboarding a massive amount of users. L2s and scaling solutions are gaining traction. The best store of value, which is ultrasound money. This is, of course, referring to the fact that Ethereum is actually burnt with every transaction. And with a 90% reduction in the emissions of Ethereum, it's very likely that Ethereum may become permanently deflationary, making it even more sound as a store of value than Bitcoin. This is, of course, due to the EIP 1559. And now we have the POS merge coming very soon. Proof of stake is potentially going to bring Ethereum into an entirely new generation. So can Ethereum save the crypto bull run? Can Ethereum save crypto itself? Well, I'm a believer that Ethereum is mostly traded like a risk asset. It's traded like the new NASDAQ, full of innovative ideas, thoughts, and potential technologies that could change the way we live our lives, like the metaverse, DeFi. It's also tantalizing to think about. But right now, we're in an era where risk assets and technology are being devalued, and the actual belief in the growth of these technologies, that can is being kicked down the road. Right now, people are turning to stores of value like Bitcoin, gold, commodities. These are the recession-type investments that people are turning to, expecting more economic turbulence in the future. Of course, if a recession comes, it might be too soon to expect Ethereum to be traded as a store of value, as effectively hard money. That, of course, is a title owned by Bitcoin, and a reason why I've become more excited about Bitcoin as a store of value since times have gotten very scary around the European conflict between Russia and Ukraine, around the wild printing of money and devaluation of currencies that's occurred since 2020, the faith and trust in governments to handle money, and of course, the actual rails on which we trade the most important commodities, like oil, something we'll be talking about in the very near future, are changing rapidly. So I don't think Ethereum will be the first choice for ultrasound money or a store of value, though that is certainly something that the big brains and those who are in the know will start doing ahead of the herd. I do think that in many ways, Ethereum is the next evolution of the technology market, that this, of course, holds all the promise for changing our civilization for the better using Web3. And right now, that narrative is not exactly the most thriving. Of course, after the midterm elections, maybe the conflict in Europe gets worse and the government needs to print more money. This will cause inflation in tech stocks as well as most likely the value of Ethereum against the dollar. All I know is that Ethereum and its proof of stake merge is something that we've been looking forward to for years. While it might not alone save the market, its reduction in supply of 90% makes it an absolutely tantalizing asset to start averaging into. I am personally a massive bull on Ethereum and think long term, if this merge is successful and the evolution of the L2 ecosystem on ETH continues at this pace, that Ethereum could be on course to be one of the biggest and most successful assets in the history of humanity. That 10K, 20K, or even those insane numbers that we were talking about at the beginning of the bull run, 50K, even 100K and beyond in the distant future, are things that are certainly possible. If you're a believer in the $1 million Bitcoin, which I am, then I believe you too should be a believer in the $100,000 Ethereum. This is not the stuff of fantasy, but if you look at the numbers, if you look at the data, if you look at the usage, Ethereum is the money of the metaverse. Ethereum is the money of the blockchain. If you want to trade NFTs, you need ETH. If you want to swap tokens on Uniswap, you need ETH. If you want to take out a loan, you need ETH. ETH is what drives the entire Web3 economy. And I'm a super bull on Web3 changing the world which we live in. Maybe not today, maybe not tomorrow, but soon. For this reason, I'm extremely excited about the proof of stake merge from Ethereum, about the chance to stake Ethereum and reliably make 10 to 15% APY on the best asset in the world. Because I know eventually its time will come, whether it's in April, after the midterm elections, or in 2024, or a few years down the track. I've been through a bear market before, and I'm ready to continue with my conviction into Ethereum. the metaverse, DeFi, continue amassing my ownership of the protocols that I believe will change the world. My name's EllioTrades. I hope you enjoyed this video. If you like the video, like the video. I'll be doing content this year on things that I find really interesting in the crypto markets, things that I think have the potential to impact the crypto markets in dramatic ways, things that I think could change the world we live in. And I hope you guys enjoy it. Make sure you subscribe for more updates, and I'll see you very soon on the next episode.